This is our Forex blog for October 10th, 2013, and these are our currency indexes, which let you see visually what each individual currency is doing. And basically, in a nutshell, all you want to do is buy the strongest currencies versus the weak, and sell the weakest currencies versus the strong. After looking at all these charts, you can clearly see the yen is the weakest currency. Here's the hourly moving average. It's underneath it, comes up to it, bounces, comes up to it, and sells off again, comes up to the previous day's low in red, and it's a resistance area, can't get above it, and if it does, the hourly is right above that and it's likely to stall and it explodes down again. So basically you want to, since yen's on the bottom of every currency pair, you want to buy the strongest currencies versus the yen. The dollar is trending up, hits our upper containment bands. Typically when it hits outer bands, it tends to reverse a little bit, so you might want to wait for a two-wave pullback at the minimum to buy it. The euro has been trending up. It's above its hourly moving average, comes down and finds support here at the hourly. Just an absolutely perfect time to buy right here at 3. Actually 4. 4 o'clock, and this currency is right here. It's also right at the middle of the range. Oftentimes currencies will work their way down to the lower band, as you can see. Kind of went stalled here, bounced a little bit here, and that was the low. So anytime you can find a weak currency that's like it has a good travel distance, and another currency that also has a good travel distance, you're set. 4 o'clock, we're looking for euro yen buys. And if you look at the chart, that points you to this, and basically all you want to do is look and see what's going on. Here's 4 o'clock. It's been kind of very slowly trending up. Just broke this trend line here without much downside action, and so when it breaks above this bar's high, you get in. Your stop right underneath here. You're risking a very tiny amount, and you can see even if you got out during this little sideways chop here, your win is infinitely bigger than what your risk is. You know, it's at least 3.5, 4 times bigger, and that's the key to trading. So we know the yen is weak. The pound was trending up earlier, comes down at 4 and breaks the hourly, finds support at the point of control, which is the most actively traded price for the previous day. Any kind of support area doesn't necessarily always hold, it usually stalls price, but a double bottom at that area typically is a pretty high probability. This is very likely to go up here at 7. So at 7 you can see the pound has been trending down for a few hours and it's right at the lower band. If it was at the lower 2.0 white band, I wouldn't consider buying the pound yen, but it's very likely the pound yen, since the yen's not down too much, is going to get some kind of a bounce at 7 o'clock. So here's 7 o'clock. This one's been trending up, pulled back, and you can see just an explosive 50 plus pip move up. Let's see what other currencies are strong. After 3:30, the Australian is strong. Notice that the daily, weekly, monthly trend is also up. The Swiss is strong. The CAD is strong. So basically, you can trade all of those against the weakest yen. CAD yen, especially after 4 o'clock, remember, you can see it went up. You buy the pullback, it went up. The Australian yen, 4 o'clock, about a 15-20 pip move up, pullback. And you know, ideally you want to find a strong currency, and if you miss the first breakout move, wait for a pullback, draw a trend line over the bar's high, and when it breaks, you get in. And the key to trading is small losses, big wins. You put your stop right underneath the swing low, so your risk is always super, super low. This is actually bigger than what it is. I misdrew that. And you can see this one kind of took off a little bit. Maybe you got out of half your trade here, and the other half the trade up here. So the net profit on this trade is somewhere in between there. If you scale out of your trades, it's probably somewhere like this. You can see that's about 3.5 to 4 times bigger than what your risk is, and that's the key to trading. So I will finish today's class by showing our FX trade signals for people that don't want to take the complexity of reading multiple time frame currency indexes. If you just want to see signals that tell you when to buy and sell, these are pretty good. Basically, you get short right here, your stop's a few pips above the high, you have a loss here, another loss, small win, huge win, small loss, decent win, small loss. And some of these trades don't show up live. This is historical, so some of the tools we use are not as accurate as live. And you can see it double topped up here. There is actually a sell signal on this double top right here that does not appear to be showing up. It did in the live version, so I'm not sure why that didn't show up. It pulled back to the weekly point of control. That one went up a little bit. The trend 16 signal had a little bounce. It sold off here and went up. You can see the majority of the trade signals are extremely accurate, and if you use this in combination with the currency indexes, which this does not at this moment have inside of itself, you can improve your accuracy dramatically. For example, if you scroll back and look at both currencies, oops, the euro is trending up, the dollar after 4 o'clock is trending down. Ideally, you want to be looking for buys. This one, the dollar returned to the hourly moving average from below its resistance area here around 9 and 10. And so the dollar is very likely to go down. 9 and 10, the euro is likely to go up. So you could be looking for some buy signals at 9 or 10, between 9 and 10. And you can see that there are 2 of them there that are pretty good. This one, you would have got in right here, lost, got in right here, and this one went up about 30 pips. And anytime you see the market make a nice explosive move up, if you want to buy the next pullback, you can see you had a chance to make about 6 or 7 pips on that trade too. And of course, if you see a down move that's a significant amount and the trend is clearly up, if you drew your trend line here, that's a trend line bounce. It's almost impossible to get a computer to accurately measure trend lines. So, but you can do that yourself. And if you see a buy signal right at a trend line, it's very likely to go up, and you would have made 10 or 12 pips on that trade here. And the signal telling you to get out, you don't have to necessarily take that, but you might want to tighten your stop a little bit or exit half your trade, and if it comes down and hits your stop, get out of the second half.